Hi Leeb reviewers, welcome to the video for December 22nd, 2009. After a lackluster week, last week, the stock market gained again for the second straight day. The continual watering down of the healthcare reform legislation that's being bogged down in Congress right now is really helping to boost investor sentiment in healthcare stocks. And several bullish analyst stock recommendations, plus better than expected existing home sales data are helping the market as well. Benchmark 10-year treasury yields climbed yet again, thanks to selling from investors who are betting on both inflation and recovery. And speaking of recovery, the final GDP data for the third quarter is in. Growth for the third quarter was revised down for the second time in as many months, down to 2.2% annualized. This is down from the original 3.5% estimate that was given in October. While the market was struggling somewhat with the bad GDP news, fortunately, it wasn't enough to offset the positive factors that I mentioned earlier. And one of those is, of course, the existing home sales. The National Association of Realtors reported today that for the month of November, the volume of existing home sales gained 7.4% from October, the best rate of growth since early 2007. But it should be noted that in terms of price, the median sales price was still more than 4% lower than last year's already depressed figure, and up just 0.2% from October. The surge in sales volume was mostly thanks to first-time homebuyers who were rushing to complete their purchase before the end of November deadline to qualify for the tax credit. This, of course, was before the tax credit deadline was extended to next year. Overall, we continue to see a mixed bag of economic data. So the market could continue to be mired in the trading range, or we could see it going even slightly higher since there aren't too many trading days remaining in the year. Of course, this is barring very important news one way or another. Well, thanks for watching, and join us again tomorrow.